Hey, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Thursday, May 23rd, no, 25th. Thank you for tuning in. I'm glad to have you guys here. So here's the thing. Toward the end of the show, after I'm done doing the markets, I'm going to explain to you guys what the deflationary spike event is, how I've predicted it like years ago. It must be 3-4 years ago I predicted it coming. We're in it right now. What it's doing and what it's going to do before it ends. And why I call it a deflationary spike event. But until then, we're going to get in there and take a look at some of the stuff that's going on. First off, Citigroup is projecting that silver is going to be $30 in the next 6 to 12 months. Yeah, but first we got to get through the deflationary spike event, because this is what's causing the price of silver to remain low. I know for years and years it was some silver price manipulation that was causing the price of silver to remain low, but right now it's this deflationary spike event. And so it would behest you to watch later in the show while I explain how it functions and what it's going to do and how it's going to play out. So that'll be later in the show. But that looks good. I mean, $30 silver, but I expect a lot higher than that, actually, eventually, with the price of silver. In other news today, you guys all know about the debt ceiling and how they're not really getting anywhere with it, right? Well, what it could do is these rating agencies, they rate the United States as to creditworthiness. And if we have some sort of an event where the United States is not raising the debt ceiling, which looks like it's right directly in front of us, and just at the end of this month, these rating agencies could lower or degrade the U.S.'s AAA rating. And in fact, they've put it on watch. It says on watch negative. In other words, they're not expecting it to go up, get better. It's going to get worse. It says, no surprise that Fitch rating has placed the United States on AAA, long-term foreign currency issuer default rating. They're on a rating watch negative right now, so they're being tested, and they're going to see just exactly if they lower this debt rating. This is big. It's very crucial. But right now, we still have a AAA rating on the United States' debt. Now, how's the debt talks going right now? They're still stalled, with the X date, which is the end of this month, approaching very fast. So the debt talks are stalled. And, this seems to be the biggest deadlock maybe we've ever had going on right now in the debt. It's a real deadlock. And you can see this. Like, if you look at, in general, the conditions of, what do I call it, relations between the two political parties in the United States, have deteriorated to a point now where it's all just infighting. It's all just fighting back and forth. You did this, you did that. You did this, you did that. And neither side can see the other side's point of view, and they can't get anything done because the two political parties are so opposed now at this point. And so we're fast approaching this end of the month, and it says Republicans are telegraphing compromise. Speaker Kevin McCarthy saying on Thursday that not everyone can be happy with the debt deal, but that he expects a compromise will emerge sometime in the next few days. Well, we'll see. We'll just have to wait and see about that. Now, we're going to take a look at the silver price today, which is at $22.84. It's down 19 cents on the day so far. We're going to get into the reason why this debt spike, this spike event is causing, and why I call the spike event is what's really causing the silver price to be down. Gold today, 1945 is down $11.80. Now, cryptocurrency today, what we're looking at in the Bitcoin price is 26,290, and Ethereum is at 1793 for Ethereum. Taking a look at the markets today, we're looking at the Dow down 106 points at 32,693. So Dow's not faring so well. Nothing's faring real well right now. All the way across the board, nothing's faring real well. Bonds are not faring real well. The markets are not faring real well. The price of crude oil is not faring real well right now. $72.49. It's down to $1.85 today. Gold and silver are not faring real well right now. Nothing is doing good, and this is because, well, I promised you guys I'm going to wait until I'm done doing the markets before I really get into this. Bonds right now. We're looking at the bond yields rising. And, you know, we're looking at a U.S. 10-year at 3.77. It's up 5.8 basis points. And the U.S. 30-year is at 3.98. It's up 1.8 basis points. Looking at the dollar index, 104.13 today, and rising. And this is all due to the deflationary event we're in right now that I predicted going all the way back like maybe 3-4 years ago. I was telling you guys, deflationary spike event's coming. You say, what is that? Because none of the other guys on talk about a deflationary spike event. Well, it's very simple. What is a spike? It's a long, sharp thing that goes down into the wood. You hammer it down into the wood. That's a spike. Down, it goes down very rapidly down into the wood. And it's pointy. It goes down to the wood with a point. Well, that's what all the markets are going to do. Everything's going to do that spike down. That's why I call it a spike event. Deflationary because it's a deflating event. It's an event where liquidity is drying out of the system at 90 miles an hour. And people are going bankrupt because there's not enough liquidity. That's what a deflationary spike event is. And we're in it. Well, this is what's caused the banking crisis that we're in right now. And the Fed's been trying to fix it. And what triggered it is what I knew the Fed was going to do. Way in advance. I knew the Fed was going to follow through and raise interest rates and do all the nonsense that they're doing. It would lead to this. I knew that the over-leverage in the system would ultimately lead to this years in advance. Now it's here. It's happening right now. Since 1949 was the last time that we had a drying up of liquidity in the system like we have right now. I think it's something like 4.5% negative of the money supplies drying up. Just, well, to keep the gears running in this system, you need to have that liquidity constantly flowing. So how is liquidity created? Is it quantitative easing that creates liquidity? Does the central bank create liquidity through quantitative easing? They can drain liquidity out of the system through quantitative tightening, but there's such a thing called liquidity trap. So because of the liquidity trap, quantitative easing does not do like the Fed. Everybody says, oh, the Fed makes money. They create money. No, the real creator of money is not the Fed. Sorry to tell you guys this, but the real creator of money is when they create credit. When the banks extend credit. The banks are the real creators of money. It's the banking system out there. When they make a loan through fractional reserve banking, they're creating new credit into the system. And this is the real creator of money that keeps the system running and well-oiled with money flowing through the system. You drain that money out of the system, you get a deflationary spike event. Basically, a deflationary spike event is when there's not enough liquidity in the system to run this credit-based system. And that's what's happening right now. And, of course, there's no limit to how far this deleveraging of the system or this draining of liquidity can go. Because it's all built on a pipe dream. The whole system is established on debt. And to service the debt, you have to keep extending more credit. And so, when you get a credit contraction like this, and you get the banks not wanting to lend any money, there's no more credit being created. It all dries up. The entire system dries up. And of course, this ultimately leads to a very, very powerful event, which is the endgame of the deflationary spike event. Is when liquidity dries up to a certain point where the system can't function and everything crashes or starts to crash. We're right on the cusp of it right now, of this final spike downwards that makes the spike in the deflationary spike event. The spike is when everything drops like a stone. All of the markets, the Dow Jones drops like, it can drop 1,000 points in a day. In multiple days. Everything goes down in price and the dollar rises. Because there's not enough dollars to go around. Because they're not creating them any longer. The banks are withholding credit. They're saying, hey, you know what? We're not going to extend you a loan any longer. We don't have enough for ourselves. So, and this takes a little, this is a process. It takes a little bit of time, guys. Well, the credit's being extracted from the system before everybody runs out of liquidity to function. The banks is getting hit first. Soon it'll be businesses, big businesses, and it might extend to a lot of markets. Like it could extend to the junk bond market. It could extend to different things like the real estate market. And basically, the bubbles start to pop because there's not enough liquidity to run them. And the worse it gets, the more the banks dry up this liquidity and not extend loans. Next thing you know, the credit card companies aren't extending credit anymore either. Everybody starts to call in. It's called margin calls. And the whole thing starts to shrink down into this deflationary spike event. So the final conclusion of this deflationary spike event is you get everything falls. It falls and falls rather quickly. Then, because there's no bottom there, it's a bottomless pit. And so it's falling down this bottomless pit. It's like a stone falling down a deep well. There is no bottom down there. It's like, oh, hello. As it's falling, down to the bottomless pit. They have to stop it. Because when it finally did hit the bottom, there wouldn't be a market. There wouldn't be anything left. And so they have to stop it at a certain point. But they're going to be hesitant to try to stop it. They're going to be like, what do we do? What do we do? What do we do? Oh, it's getting worse and worse. Oh, what do we do? Finally, in the end, they'll panic and they'll stop it. But the further they let it fall down there, the more it's going to take to get things back on level keel again. You see what I mean? And so the further they let it go down on this end, and the longer they let that spike go down and everything fall, the more it's going to take to retrieve the system back again. And at a certain point, they will panic. While it's still falling, they're going to panic. And they're going to try to stop that fall. They'll stop the fall. This is what we're looking for, guys. This is what's going to make you. If you've got gold, silver, and cryptos. Is because when they stop the fall of this thing, it's going to be the effect. Have you ever seen, there is an effect where a guy will jump in off a bridge or something, and he's holding a basketball. And when he hits the water, the basketball goes springing up into the air like 1,000 feet. Well, not that high, maybe 100 feet high, the basketball. It's an effect, and this is the effect of what gold and silver is going to feel when this deflationary spike event goes down. It's like the basketball heading down toward the water being held by a really fat guy. And when it goes boing, it's going to go shoo, just in the opposite direction. Shoo, like a bullet. Gold, silver, cryptos. But that's when your dollar's going to lose. And lose big. Because that's the realization point. Everybody out there realizes, hey, you know what? They're not going to ever let this system completely crash out and let all the debt. In other words, they're never going to flush the toilet. And they finally realize that. They are never going to flush the toilet. And so what's going to happen is at that point, people are going to realize, hey, my dollar's toast. I got to get out of these fast as I can. So one thing is going to create another thing. So when the deflationary spike event ends, and they're going to end it with monetary, I don't know what they got up their sleeve. You don't know what they might do. They might come out and they might backstop every person in America with UBI. They might do everything they did during COVID, but times 2. Checks in the mail. Stimmies and everything else. When this hits, when they finally panic. When the markets fell, everything's falling. The real estate market's crashing out of bed. Everything's crashing on them. They will do whatever it takes. Mario Draghi said it best. He said, we will do whatever it takes to support. And they have the same thing. They can't let their system completely crash. They have to keep it running. This is what maintains them in power. There's no political will for them to do a Paul Volcker at this point. They're only half doing what, like they're just, it's more or less what they're doing with this raising interest rates up is just not even a quarter of what they really do need to fight inflation. It's just a half-hearted kick at the can, so to speak. But it's going to end in this deflationary event because the system is so over-leveraged at this point, it can't even withstand 5% on the 10-year. How are you going to get it up to 20% on the 10-year where it needs to be to really cut this inflation? To beat this inflation monster, that's what they would need to do. They wouldn't be able to service the debt. So there's where they're trapped. It's just that it has to be proven yet that they're trapped. And this deflationary spike event is going to prove that they're trapped. And at that point, you're going to get the beach ball effect or the basketball effect with the gold, silver, and cryptos. But you got to wait for it. So when you're buying this stuff, every time you see the price drop on gold and silver right now, look at it as an opportunity. Because on the other side of this thing, it's going to be massive moves upwards. Gold, silver, cryptos. Because they're out of the dollar. What else is out of the dollar? Nothing. You can buy everything. You buy into the markets, you're buying into the dollar. You buy into money market funds, you're buying into the dollar. You buy CDs, you buy mutual. Doesn't matter. You buy bonds, everything. It's all dollar denominated assets. But when you buy gold, real gold, you're buying something that's not a dollar-denominated asset. Plus, it doesn't have any counterparty risk. That's what everybody's going to want when this thing switches directions. So just like I told you guys this thing was coming, this deflationary spike event, that there was going to be a drying up of liquidity and there was going to be a deflationary event before we finally hit the final stage where gold and silver go to the moon. It's like I told you guys is coming. I warned you about it. A long time, I said, when you talk about gold and silver going up, I'd say, hold on, but we got to go through the deflationary spike event first before we get there. And now we're in the middle of the deflationary spike event. We're getting ready for the conclusion of the deflationary spike event, which is going to be deflation, probably. Real deflation. If you can imagine that. But how short-lived is it going to be? It's going to be very short and sweet. Just so you guys are holding the dollar. My gosh, you're going to have, if you're going to be successful with this deflationary spike event, you're going to have to, your timing is going to have to be very precise because this thing's going to end so fast when it ends. When they finally panic and they try to turn this thing around, it's going to end so fast. And then if you get caught in the dollar, you're going to be, it's not good. You're going to lose because the dollar's going to take a haircut. If your timing's not right. So it's much easier. It's much easier just to go ahead and buy gold and silver now rather than try to time this thing, just buy gold and silver. Buy it's much easier just to buy your cryptocurrencies, or whatever you're going to buy that's out of the dollar. And keep that as part of your portfolio and think long term. Think, hey, long term I'm going to make out good with this. And you will make out good with it. Because this deflationary spike event is reaching a final conclusion, and I can just see it coming. I can smell it now at this point. There's going to be a crash. Because it's the first time since 1940s we've seen a really large shrinkage of the money supply. And it's getting worse. It's getting a lot worse fast because the banks aren't lending. So thank you guys for listening to my show. I hope I tried to explain that pretty good to you guys. And how can you profit off of it? The best and easiest way is to hold your course. If you're a stacker or you're a hodler, hold the line. Don't get shaken out of the tree. We'll catch you guys in the next show. Have a great day. Bye-bye.